Markets move when people move together, and understanding that early is the real advantage. When we move together, we shape outcomes, build wealth, and secure a safer future. The S&P 500 closed slightly higher as tech stocks outperformed, offsetting weakness in energy and utilities. The Dow remained flat, reflecting mixed sector rotation. Investors digested the latest inflation data showing a modest slowdown, which eased rate hike concerns. With inflation cooling, risk appetite is improving, favouring growth sectors like technology. Defensive sectors may face pressure if rates remain stable or decline. Latest CPI figures showed inflation easing more than expected, allowing the Fed to keep rates on hold. Fed officials emphasised patience, hinting at a possible pause in rate hikes. This tempered bond yields and boosted risk assets today. The Fed's patient stance should support equities in the near term, especially sectors sensitive to interest rates like tech and consumer discretionary. Semiconductors and technology sectors led gains, driven by strong earnings forecasts and resilient demand outlooks. Consumer discretionary also showed strength as confidence improved. These sectors are benefiting from easing macro risks and solid fundamentals. Focus on tech and semiconductors, given their leadership and positive earnings momentum. These sectors are positioned well if the risk-on trend continues. Energy stocks declined amid lower oil prices and reduced geopolitical risk premiums. Utilities also lagged as investors rotated out of defensive plays. This shift reflects growing confidence in economic stability and lower inflation risks. Energy's weakness may persist if oil prices remain subdued, while defensive sectors could face headwinds in a sustained risk-on environment. Nvidia surged after raising guidance, fueled by demand for AI chips and data center growth. This stock is a clear leader in the semiconductor space, benefiting from both secular trends and near-term catalysts. Nvidia's momentum is likely to continue near-term, driven by strong fundamental outlook and sector leadership. ExxonMobil pulled back as oil prices softened and investors rotated out of energy. Despite solid fundamentals, the sector faces pressure from lower commodity prices and easing geopolitical tensions. Energy stocks may remain pressured if oil prices do not stabilize or rebound soon. Market sentiment shifted to risk-on as inflation concerns moderated and the Fed signaled a pause. This encouraged buying in growth and cyclicals while defensive sectors retreated. Volatility declined, reflecting calmer market conditions. The current environment favors selective growth exposure and cyclical recovery plays, while cautioning against defensive overcrowding. Investors should consider overweighting tech and semiconductors given the strong earnings outlook and supportive macro backdrop. Energy and defensive sectors may lag if inflation remains subdued and risk appetite stays elevated. Positioning for a continued risk-on environment is high conviction, but remain vigilant for inflation surprises or geopolitical shocks that could reverse trends. Highest conviction setup, NVDA. Nvidia is capitalizing on robust demand for AI chips and data center expansion, supported by raised guidance and strong market positioning. Its leadership in next-generation technology makes it a standout in the semiconductor sector amid improving macro conditions. Expect Nvidia to maintain upward momentum as investors respond to its bullish guidance and growing AI adoption. The stock could see further gains as sector rotation favors tech and semiconductors. If this breaks, a sharp sell-off in tech or disappointing earnings, updates from Nvidia or peers could undermine this thesis and pressure the stock. What happens next? Markets continue to favour growth and tech sectors, with steady inflation and a patient Fed. Risk-on sentiment supports cyclicals and semiconductors, while energy and defensives lag. Unexpected inflation pickup or hawkish Fed comments could trigger volatility, prompting rotation back into defensive sectors and pressuring growth stocks. Tomorrow watch, upcoming CPI and PPI inflation reports. Fed minutes for rate guidance clarity. Earnings releases from major tech and energy companies. Oil price movements and geopolitical developments. Volatility index, VX, trends. Semiconductor sector order flow and inventory data. Markets move when people move together, and understanding that early is the real advantage. When we move together, we shape outcomes, build wealth, and secure a safer future. Real wealth starts with discipline, health, and strong relationships. Take care of yourself. Take care of the people you love. Stay focused, keep learning, and stay informed. Until next time.